Now we're staying with the news about the US jobs report. The more than expected addition to the labor force in September has shaken the Federal Reserve, which expected the jobs market to in fact cool down. The huge spurt in hiring last month has potentially bolstered the case for another hike in the interest rate. However, the September report highlighted just how resilient the US economy has remained in the face of the fastest Fed rate hikes in a generation. But it also left the Fed to feed on a stew of conflicting signals, rise in jobs but wages stagnating, surge in hiring in some industries but in unemployment rate remaining steady at 3.8%. Moreover, a rise in hiring is likely to impact the Fed's ongoing battle against inflation too. Perhaps many now also anticipate that the Fed will go for a soft landing which slows inflation without fracturing employment and growth. And for more insights on this topic, we're being joined by Simon Lee, Honorary Fellow from the Chinese University of Hong Kong, and he's joining us live from Hong Kong. Welcome to the broadcast, Simon.
Good morning.
Hi. So my first question to you is that what do you think this job surge in the US in September indicate about the state of the economy, also keeping in mind that the unemployment rate remains still steady?
Now we need to look at more data, say in October and November, but it's indicated that the US economy is very strong. But if you look at the job openings figures in detail, some are related to teachers. They return to school opening, and the majority of it is related to the hospitality industry. It's rebound to the pre-pandemic level because close to the year end, there are lots of demand for the hospitality industry, so they need new staff. So that's why I explained that we need to wait for more data in October and November to see such pattern continue. But we see that the salary rise still remain low, and then it's not as sharp as what we observed in the previous month.
Sure. So do you think that with this positive job report, is this going to have any impact on the upcoming interest rate decisions of the Federal Reserve?
Now, it's quite related to inflation. The current inflation rate is still higher than the long-term average. So if the job openings continue to rise, salary continue to rise, so it slow down, but it has negative impact on the inflation. And I think very high chance that the Federal Reserve interest rate will have another rise before the end of the year. There are two forces. One is that 22 years high already. But I intended to believe that if the inflation is still higher than the long-term average, then there will be high chance of having another interest rate rise by the end of this year.
Sure. Thank you so much, Simon, for giving us all those insights on the current job hike in the US. Thank you.